Hello and welcome to Connect and Collaborate. I'm Alex Hopkins, your on-air producer, and I'm excited to have in studio with me Kelly Sloan of Sloan and Associates. He's also a frequent contributor to Colorado politics, as well as the Washington Examiner, and a fellow at the Centennial Institute. So welcome, Kelly. We always have a pretty fascinating conversation in here. We talk legislation, we talk what's going on. It's April, so
Yes.
We're real close.
Yeah, we're getting there. There's about a month left.
Yes.
In fact, just about a month left. May 4th is the last day.
Yeah. Right, exactly. And then we have an election coming out on May 7th. So there's a lot that we have going on. But getting to that, I kind of just want to jump right in here, if you don't mind.
Of course.
Yeah. Let's start with the equal pay.
Right. So remember last time I was on last month, one thing you commented on was we saw a lot of social issues cropping up. We didn't see a lot of the economic issues quite yet, didn't see much of that agenda. Well, boy, has that changed.
Yeah.
Yeah, we've seen quite a few bills come out this last month that the business community is concerned about, that we're going to have some, I think, some pretty dramatic impacts on our economy. And one of them was when you want to mention first the equal pay. Is that the first one you wanted to talk about? Yeah. So that one came out, and it's going through. Really, what it does, it's meant to address, the perception that women in the workplace are paid less, and to try and address some of the issues around that. What it does is a lot of business owners are concerned about the way it goes about that. For one thing, it requires any job position within a company to be posted to everybody, whether you're qualified or not. Now, the idea, I believe, is that it would offer that position to people that it may not be offered to otherwise, that may have a shot at it, presumably women. What in effect I think it's going to do is cause a lot of confusion, probably a lot of cost, of course, and posing it to more people than probably it ought to be posted to, and then having to deal with perhaps a lot of applications from people who aren't really qualified for the job, and then possibly some some distrust or some angst among the people that aren't qualified for it when they apply. One example that was given in one of the hearings I went to on this bill was that you may have two jobs that have the same title. For example, nurse. But a floor nurse is considerably different in terms of qualifications and training than a NICU nurse, or something like that. So, or a professor. So if you're at CU Boulder, and you're looking, there's a difference between a physics professor and a physical education professor. So there was some issues.
Tenure plays a factor.
There were some issues with that.
Yeah.
The other thing that the equal pay bill does is puts a lot of contentions into the courts instead of department level. So if there is if you do have some differences in terms of pay, you do have a complaint, it pretty much puts it directly into the courts, as opposed to going through some more administrative methods as it had before. So that, of course, adds a lot of cost to the employer, who now has legal costs and court costs and time and all that sort of thing. So there's a lot in the business community that think that this is something of an overreach. So that's the first one. What else do you have?
Well, just a few comments here on the equal pay, actually, from my perspective. One of the things I think a lot of women face when it comes to the equal pay, we tend not to go for jobs that we actually are qualified for because the title doesn't exactly fit. So I'm actually interested and excited by this notion that we can open up all of these jobs to everyone, because it may have some notion that I could move up.
Right.
But had I not known about that before, I may not have tried for that position.
Yeah, I think the way business owners are looking at it is, they want as wide a pool as possible. And of course, women are certainly at least as qualified as men for most positions. I don't think you'll see a lot of positions being offered that are being restricted to a pool that is I think, too restrictive. That's that it's going to limit the business owner in whom he can have to apply for the job. I think that should be. I think the business owner or the HR department know best what they're looking for and kind of who they're looking for. So to have the government tell you who you should open that up to, I think is a little counterproductive. Now, one thing I have heard from women is that perhaps one thing holding them back in certain situations is that they perhaps aren't as assertive as men are in asking for raises or asking for promotions. I don't know what legislation can be passed that would help with that.
Yeah.
So I'm not sure this bill accomplishes that.
No, but hopefully we get there, and I
absolutely.
think, yes, women are definitely taking some more, taking their own reins in.
Yeah,
and
as they should.
And taking more chances. But moving on, this Family Leave Act,
right.
I feel like this one's been back and forth. There's a lot of contention over this.
Yeah, and I don't think anybody argues with the concept of having some kind of family leave. I think it's how they go about it. What this bill does, that's going through the legislature, is it imposes basically a new tax. It's a fee, of course, so it doesn't have to go to the voters. But it imposes basically a payroll tax on both the employer and the employee that they have to put into this pile. There's a number of issues with this. Not only is there the added cost onto a business owner, and it's pretty much any business owner. At least in the original iterations of the bill, there were no real lower limits. If you had 2 or 3 employees, you still had to participate in this. But the other issue is it doesn't really mesh with the Federal Family Leave Act, which allows for, I think, up to 12 weeks of family leave to take care of a loved one or a pregnancy, that kind of thing. This also allows 12 weeks. So a lot of business owners are concerned that because the two programs don't mesh, you could now take advantage of both of them and have up to 24 weeks of paid leave, which now a business owner is on the hook for keeping that job open and either having to find somebody temporary to fill it, which now he's paying two wages for the same position for an extended period of time, or try and make do without a position that he's paying for, but the work isn't getting done. So I do think there's been a lot of work by a number of groups. The Independent Women's Forum did a fantastic study nationally that showed there's better ways to do this. In fact, there were a couple that were proposed through the legislature, which ended up getting killed. And one would be to do this through a system of tax credits to the employer to offer that. So if an employer offered paid family leave to their employees, that they would get a tax credit for that. I think that's that the carrot approach is much more effective than the stick approach.
I would agree with you on that, actually. I wanna move over into oil and gas.
Right.
This is a really big one. We saw a lot before. We know that Governor Polis actually voted no on Proposition 112.
Mm-hmm.
So then what this Senate Bill 181 is doing is, one, changing the mission of the COGCC.
Right.
And also we're seeing a couple of other things, pooling and pushing this into local governments.
Yeah.
So there's a potential that this could shut down oil and gas production.
Oh, absolutely there is. The first part of the bill that you mentioned about changing the mission of the COGCC, in my opinion, is the most egregious part of that bill. Most of your listeners probably know by now the purpose of the oil and gas commissions around the country, not just in Colorado, was to foster oil and gas production. Now, when we say that doesn't mean to help the industry along financially. What the purpose was is back in the early days of oil production, Pennsylvania is where it started. We discovered that if you punch holes in the ground, this wonderful black stuff comes out that you can burn and is really valuable. But we didn't
bubbling crude.
Yeah, bubbling crude. Yes. But we didn't concurrently discover petrophysics or some of the geology behind it. So what was happening is everybody would converge on that one area where a discovery was made, drill a bunch of holes, and they'd end up depressurizing a field prematurely. So you'd end up leaving 70, 80, 90% of the recoverable resource unrecovered in the ground. That was always considered waste. And considering the value of that commodity to the national economy, commissions were set up to kind of map these fields, and that's why they do the permitting. They want to make sure that wells aren't too close, you're not depressurizing a certain area. They make sure that the wells are put in the best locations possible to maximize the utilization of a national resource. So by changing that mission, you now have nobody that's doing that. We've changed the mission to one that the permitting is considering pretty much only quote unquote health and safety. Now, we have other departments that are already doing that. CDPHE does that. HICPUF does. There's a lot of departments that already do that, but we don't have anybody that's doing the role that the Oil and Gas Conservation Commission was initially put in place to do, which is to conserve that resource for as long as possible so we can keep using it into the future. I find that somewhat disturbing. So I think that's the most egregious part of that bill. The other part, of course, is that there's a lot of rules and regulations that now have to be promulgated out of this bill, and it gives the director of the COGCC the authority to put on hold any permitting until all of those are done. Now that can be pretty much indefinite, depending on who's running the COGCC. And as we know, the current governor, who makes the appointment to the COGCC, is not the biggest fan of the fossil fuel industry. So that's the other big concern I have. And then in terms of local control, here's my take on that. If we really wanted local control, we would allow local governments to put in place regulations that were less restrictive or less strict than the state. We're not doing that. We're saying, well, you have some control over this, but it has to be more than what we've put in. So, it's a little disingenuous to say we're offering local control when we're not really. We're allowing local governments to exceed what the state does, but not to roll anything back as their economies may determine is appropriate.
I think I agree with you on the two big things being the COGCC commissioner will have more power than we've ever seen before.
Right.
And redefining that role of the COGCC, I believe will be detrimental, in my opinion.
Absolutely.
Yes. Moving on.
Sure. Rent
control, affordable housing.
Yeah.
Lots of bills in this area.
There are. That one just got introduced. So I'm not really an expert on this this area, but I can say it is one that just got introduced, and the experience around the country with rent control hasn't been positive. The free market is, as I've said on here several times, as other economists have, the best determinant of prices. And when you put in something like a rent control or a price control or a minimum wage, which really is a price control on labor, you end up having unintended consequences here, there, and everywhere. We've seen it in New York. We've seen it in other major cities. I don't think we want to go that route here in Colorado, but that's a new one that just came out recently too, which I think people need to keep an eye on.
Definitely do your research on that. And it's interesting that you compare it to New York. Denver is a growing city, inevitably. Mm-hmm. We're along the lines of being as big as Chicago, New York, LA. We have a ways to go. Don't get me wrong. I am aware of that. I'm ready for us to get there. But that being said, I think rent control is one that you definitely need to do your research on. I'm not ready to give an opinion on that one yet, so I'll hold off. Let's talk about climate change.
There's... So the oil and gas bill 181 is only one of a number of energy-related bills. There have been a few of them I think people need to watch. One that was introduced last month would put on fiscal notes. Now every bill that goes through the legislature that has an appropriation that costs money comes with a fiscal note that describes how much money that's going to cost, and they do an analysis. They don't do an active analysis in terms of, if what happens with this bill actually happens, here's what's going to occur. They just look at the straight numbers. This will cost X amount of dollars. Now, they have a bill that would add greenhouse gas cost or climate cost to those fiscal notes. So if you have a bill that conceivably would increase the amount of greenhouse gas going into the atmosphere, it would put a cost to that. It's a little unclear whether it would require the fiscal analysis to actually quantify that, which would, I think, it'd be an absolute nightmare. Or if it would just have them put on there that this will increase climate costs. Now, of course, that sounds fairly benevolent, especially if you're an environmentalist. But again, this is a political building, and this is a political question, and being that, anything can be weaponized. And I think the purpose of a bill like that is to weaponize certain bills. If you have a bill you don't like, and you can attach a carbon cost to it, well, that's going to go a long way to getting it killed. So that's one. There was another one, 1261, which is going to be heard soon, which is a climate action plan to reduce pollution. What that does is sets Colorado's carbon limits to, what are, in my opinion, ridiculously low levels by, within the next decade, without much of a plan on how to do that. We see this. I think this kind of ties in with the governor's plan to go 100% renewable by 2035, without having a blueprint on how to get from here to there. We know, for instance, that wind and solar, the renewables that everybody's kind of counting on to be able to do this, are kind of naturally capped at about 20%. It's almost cliche to say it, but the sun doesn't always shine, the wind doesn't always blow. But it's the truth, and we do not have currently, or in the near future, the technology, the battery technology, to be able to store that energy. Until we solve that fairly insurmountable obstacle, we're not going to get much above 20% with the renewable resources we have available to us. So, especially if we continue our what I consider an irrational fear of nuclear energy, that's not even on the menu in Colorado. If we really want to get to a zero carbon economy, I think we can do it on the electrical side, on the electrical generating side. But nuclear has to be a major part of that conversation. And as a politically incorrect source, it's just not part of that conversation, and it's not addressed in any of these bills either. But you're starting to see a lot of that. You're starting to see a lot of bills that kind of promote electric cars beyond what the market is demanding. We see this outside the legislature too, with the California low emission and vehicle standards that the former Governor Hickenlooper, established with an executive order, and now the zero emission standards, California's ZEV standards, which the current governor is implementing through an executive order, and for which we're going to have a hearing on in May. So as soon as the legislature is done, I'm moving directly onto that issue. But what those mandates are doing is, and some of the accompanying bills in the legislature are trying to create a market where there isn't one. Colorado is not California. I think we've spoken about this before. We've probably had other guests speak about this, but we have a much different climate. We have a much different terrain. We have a much different makeup of our economy. Our rural area is different. What they do in the rural areas is different. You don't see a lot of electric cars out on the roads here. You certainly don't see them out in our ski resorts. If you go to any ski resort, you go through the parking lot, you're not going to see a lot of Volts and Teslas. They're going to be SUVs. That's the kind of vehicles that Coloradans need. There's no amount of legislation can change that. But I think that's what a lot of people in both parties are really looking to do with some of this legislation. We have one bill that would allow electric vehicles to drive in the HOV lanes without paying, with one person, and without paying the toll. You see changes and increases to the electric vehicle tax credit system, which is basically a giveaway to Tesla. You see other bills that are putting into the regulatory realm of the PUC, the Public Utilities Commission, the responsibility for installing and maintaining some of these, the infrastructure for the electric vehicles, charging stations, that kind of thing, which is going to fall on the ratepayers. Even AARP has come out against against a lot of these because they know that their members, seniors, many of whom are on a fixed income, are now going to have to pay more of that fixed income to subsidize these people that have electric vehicles, which, let's face it, are generally the wealthier segments of our society. So anyway, you see a lot of those kind of bills going through as well.
Absolutely.
Sorry to get off on a little bit of a tangent there.
That's all right. I don't mind that at all. I do. We are counting down the clock on this segment. Yeah. But I definitely want to hit on Tabor.
Right.
Yeah. A little overview of Tabor and then some measures that we're seeing.
Sure. So, of course, the Taxpayers' Bill of Rights, there's two parts to it, and everybody kind of forgets there's two parts to it. The one part that everybody's mostly familiar with is the part that requires any tax increase to go to the taxpayer, or to go to the voter. The voters have to approve any tax increase. Well, there's a second part to Tabor as well, and that's kind of a growth limiting measure that limits government growth to, or what the government can spend, the growth in that to inflation plus population change. So it allows some systemic growth to occur in the budget, but it caps it. It doesn't allow the state government to kind of expand its horizons, if you will, in terms of what they can spend. So there's a bill going through right now that would kind of go after that second part, that says that any revenue that's collected above that cap, which right now has to be refunded to the taxpayer, will instead be allowed, the government will be allowed to keep that. And then there's a companion bill to it which says ostensibly what that revenue that the government's allowed to keep has to go to, and it's education and transportation. It's similar to Referendum C, which we saw was a little over a decade ago, except there's no expiration date on it. It would just kind of do away with that one section of Tabor more or less indefinitely. So there's some concerns there. As I wrote in a column a couple weeks ago, in my opinion, there's three pillars of fiscal pillars that are kind of keeping us on the level in the state, and one of them is Tabor, including the growth limiting part to it, the balanced budget, and the flat tax. So I think that's one people want to keep an eye on. It could also, if the government's allowed to keep revenue above that cap, you could also see a lot of tax exemptions start to go away, start to be repealed. Because now, if you repeal them right now, when the economy is doing well and we're above that limit, you repeal a tax exemption or a deduction or a credit, it just has to be refunded back anyways. Well, if you allow the government to keep the excess revenue, there's really not much limitation on why they wouldn't want to get rid of an exemption, a credit, or a deduction, which they call tax expenditures, which I've always considered a curious term for allowing somebody to keep their own money. But there's that. So.
Well, thank you, Kelly. It has been a pleasure, but we're going to take a quick break here on Connect and Collaborate. Stay with us. We'll be right back with Joint Budget Committee Chair, Senator Dominick Moreno. So stay here on Connect and Collaborate. Be sure to like and subscribe our YouTube page. You can find more information in the description below and find all of our shows at cobrt.com/radio-podcast. We'll be right back. Welcome back to Connect and Collaborate. Once again, I'm Alex Hopkins, your on-air producer, and we have in studio with us Kelly Sloan of Sloan and Associates, and also frequent contributor to Colorado Politics. And for the second half, we're excited to have joining us by phone Senator Dominick Moreno, who is also the chair of the Joint Budget Committee. So welcome back. And Kelly, how are you doing?
Doing well, thanks. So in the second half, we're going to talk about the budget. As you may know, the Colorado General Assembly constitutionally has assigned only two official duties to it that it must perform every year, or that it must perform. One is redrawing the congressional districts every 10 years, and the other is passing a budget every year. This not being a year which happens to follow directly a census, the only thing which the state constitution requires the legislature to do is to pass a budget. Given the sheer volume of activity and the number of bills introduced every year, the casual observer can be forgiven for not knowing that. However, that is a fact. Some might consider the fact that Colorado has a balanced budget amendment as a sign that Providence still has a hand in the state's governance, but the devil, of course, remains in the details, and the task of working out those details and formulating the state's budget falls to the Joint Budget Committee. To help us untangle some of those details and shed some illumination on the process, we are joined by Senator Dominick Moreno, who, as you mentioned, is the JBC chair and as such shoulders much of the credit or blame depending on whose budgetary ox is being gored. Senator Moreno was born and raised in Commerce City, Colorado, graduated from Georgetown with a degree in American government. He returned to Commerce City to become that municipality's youngest ever council member. He subsequently ran successfully for the State House of Representatives in 2012 and thereafter was elected to the Senate in 2016. Welcome, Senator Moreno. I'd like to begin by asking if you could describe to us, if you will, the role of the JBC and, in 1,000 words or less, the process for devising the state's budget.
Yeah, so thanks for having me on. So the Joint Budget Committee is kind of a unique animal in Colorado and actually in the country. Colorado is one of the very few states that actually has a joint committee of the Senate and the House of 6 members that kind of dig our way through the state budget each year, and it's a very robust process where departments come in, we have a briefing on each department, and we get to pose questions to the department and to our analysts, and then they come in for a hearing, and then we actually later in the session start to true up the budgets of each and every department, and then actually set the budgets for the next fiscal year. And so it's a really robust process. The Joint Budget Committee has an independent team of 13 analysts who work their way through the different department recommendations and provide their own recommendations to the Joint Budget Committee. This is sort of unique of states in the country. Many other states, the House will draft one budget, the Senate will draft a different state budget, and at the end of the day, they have to somehow reconcile the two. This state is unique in the sense that we've actually established a committee of legislators from both houses where we dig through the budget and we start actually long before the legislative session even begins, right after the elections in November, and we spend about 5 months developing this product that we then deliver to our colleagues in the House and the Senate.
Now, what are some of the limiting factors that you're faced with, given taxpayers' Bill of Rights, some of the constraints there, and of course the balanced budget amendment? How much latitude does the Joint Budget Committee have in where to appropriate some of these funds?
Yeah, so that's also a great question because this is another area where Colorado is unique. Colorado is the only state in the country to have the Taxpayer Bill of Rights, or TABOR, that actually says taxes can only be raised by a vote of the citizens. In other states, legislators are given that power to raise or raise taxes. Here, it can only be done through a vote of the citizens. And so what it means in terms of budgeting is that you're given a source of revenue that only changes if the economy is doing better, or if there are inflationary increases, or perhaps population somehow affects that. So you really have a budget that's largely stagnant because if we run short on revenue to cover all the different state functions, we can't then go and raise taxes on any individual or any business. We actually have to just figure out a way to make the numbers work. And so it has proved a little challenging in the sense that TABOR also imposed a cap or restriction on how much government can grow by each year. And if you are over that cap, then the excess has to be refunded back to taxpayers.
Right.
The challenge in that scenario has been that when we are in years where we are above our Tabor cap, again, that is money that you would otherwise have to allocate to different state departments or critical government programs that instead you are required by our state's constitution to give back to taxpayers. And so it's really created a unique budgeting scenario. I would say it's kind of like budgeting with one arm tied behind your back, because you can't figure out the revenue piece in any way. You have to kind of live within the means that you're given.
Right. So the budget itself, the number you're working with, is pretty much fixed from the beginning. Is that correct?
Yeah, that's correct.
So let's dig into some of the numbers a little bit. What is the budget for the state this year? What's that come to?
Yeah, so if you don't count reappropriated funds, which is really just the same color of money that we're just counting twice, it's money that moves in between different state departments, you're looking at a budget of about $30 billion is what we work with each year.
Now, has that changed much over the last few years? I know you mentioned Tabor, and the growth cap. I believe it's limits growth to inflation plus population change. Has there been enough inflation and population change in the last few years to really change that number a whole lot?
So the number hasn't changed a ton. I mean, it does continue to grow, but I would say the budget grows at about the pace of inflation. We are fortunate. Colorado's economy has done well, so we've had additional resources to work with in the past couple of years. But sometimes these things, a wrench gets thrown in the process, as we saw in the most recent budget year, where our forecast didn't come in as optimistic as we were expecting, so we didn't have as many resources to work with as I think we all had hoped. And so, for the next year, everyone kind of points to the number that we had $1 billion more in revenue. But if you actually think about the reality of how budgeting works, how state programs grow over time, if you remove the inflationary increases for all those different state programs and state departments, we had far less than $1 billion to work with. We had about half of that. And so the budget has grown over time, but I would say it hasn't really outpaced inflation much. It really is kind of a consistent growth year over year.
Right. Now let's talk about that forecast a little bit. Can you tell us a little bit? I know at the beginning of the year there was, or last year there was, the federal tax reform had an impact on the state's budget numbers. Can you tell us a little bit about that and how that impacted the state forecast?
Yeah, absolutely. So the Joint Budget Committee receives quarterly economic or revenue forecasts, and it's a way for us to keep track of how our revenue's coming in, how accurate were we able to tailor the budget to the available revenues. And so, we received a revenue forecast in December that was very optimistic, that said, hey, Colorado's economy is continuing to grow. We think that, we'll have a decent amount of resources to work with in the next fiscal year. And then we got the March forecast, which is the forecast that we actually use to balance the state budget. And it was the picture was significantly different. In fact, the forecast was the projections were reduced by about $250 million, or $250 million. That is money that kind of just vanished into thin air overnight, and we had all expected that we would have $250 million more to work with that we ended up not having. And so the forecast can really vary quarter by quarter. I would say, the increased uncertainty in this most recent forecast has been to exactly what you mentioned, Kelly. The federal Tax Cuts and Jobs Act, which has changed taxpayer behavior in kind of ways that we couldn't really predict. And so there's a lot of increased uncertainty in the state's income tax collections that, we're continuing to see bear out, and, we're kind of waiting for the updated data once more folks file their tax returns. So that has led to some increased uncertainty. But then generally, our economists are showing that the economy, both nationwide and in Colorado, is starting to slow down. And it's too early to say if it will result in a recession or not, but we have had unprecedented growth in our economy for the last, 5 to 8 years. And the pace at which the economy has grown was always going to be really difficult to maintain over the long term. And so we're starting to see signs now that it's starting to slow down. And so that was an indication that we need to start preparing. We need to start hopefully building the state's reserve, our piggy bank for when we fall on hard times, and really start getting ready for that we might not have as much revenue in the future as we've had to work with in the past.
Sure, and a lot of economists have pointed out that we're kind of overdue for a recession. It's been the longest stretch, I believe, in close to a century that we've gone without a recession. Are my numbers correct there, Senator?
Yeah, no, that's exactly right. I mean, it has been an unprecedented economic expansion, and what's really interesting is the rate at which the economy has expanded. And so, we've had this kind of explosive growth that we're just not going to be able to maintain going into the future. And so those were the signs that our economists started to point to, that, property values in Colorado are starting to level off, home sales are starting to level off, population growth is starting to slow. Those are all key indicators that the economy is going to start slowing down.
Right. Now, you touched on, I was going to ask you what in your opinion accounted for the difference in the two quarterly forecasts. And you mentioned the change in taxpayer behavior. The initial forecast, I believe, a couple quarters ago, indicate because of the Tax Cuts and Jobs Act, Colorado was actually going to increase its revenue. What accounted for that? And then, in your opinion, what is it about taxpayer behavior that's now accounting for the decreased?
So one of the things that we're seeing in the federal Tax Cuts and Jobs Act is that folks, there was increased uncertainty and, what, at the end of the day, what people's tax liability was going to be. And Colorado has a really interesting and unique system where we have what's called rolling conformity. So any changes that happen in the federal tax code, we automatically adopt at the state level. And all of our state income tax is based off of a percentage of what folks pay in federal income tax. And so because of that, because you've seen increased uncertainty, Colorado is uniquely affected in that sense because, we automatically take our direction from the federal level. And what you've started to see is that because people weren't sure how the new federal tax code would impact them and impact their tax liability, they were actually overpaying a little bit in what they owed in federal tax. And now that there is a little bit more certainty, they're actually coming back and truing that up through their tax filings. And so what we've seen, and that's a key reason why the revenue projections were so much lower than we expected, is that taxpayer behavior of they were paying more before, and now that there is more certainty, they're coming back and truing up their taxes, which has meant we've taken a hit at the state level for what we can expect in income tax revenue.
Right. Now I know part of that hit fell on the governor's top priority that he alluded to at the beginning of the year for full-day kindergarten. I believe he has roughly 3/4 of the money or 2/3 of the money that he asked for that. Talk a little bit about what is the governor's role in the budget. The governor gives his recommendations every year. How does that play into your decisions on the JBC?
Yeah, so it's a great question. I mean, so the state constitution gives the power of appropriation to the legislature. So, through the Joint Budget Committee and the product that we deliver to our colleagues in the House and the Senate, that is how the budgeting decisions are made. But a lot of times we do start from a framework that is provided by the governor. And so by November 1st of every year, the governor is required to deliver a budget proposal, a balanced budget proposal, to the Joint Budget Committee. And it is his opportunity to identify what his priorities are. And Kelly, as you mentioned, the main priority for the governor this year, Governor Polis, was free full-day kindergarten. Right. And it didn't come at a cheap cost. The price tag for that is about $185 million. And so that was a key part of his of the budget proposal that he submitted. Now, the legislature really has the option of deciding to work from the governor's framework that he's provided, or starting all over. In essence, the Joint Budget Committee starts really early, and we make our way through every department. And so while we consider the governor's requests and his recommendations, because at the end of the day, the budget has to pass the House, it has to pass the Senate, and it has to be signed by the governor. And so we do have to, obviously calculate in his priorities that he's identified in the budget. But what's interesting is that the legislature is under no requirement to actually deliver on anything that the governor identifies. And so, but that
chances risks a veto, though, correct?
What's that?
That potentially risks a veto, the governor's veto.
Yeah, exactly. So so you do want to pay attention to the priorities that the governor has identified, because if you don't, and you deliver a budget that has nothing in it that the governor has identified as a priority, you do risk a veto. And so, traditionally the Joint Budget Committee and the governor's office has worked together very closely on priorities to figure out what is the appropriate balance between the governor's priorities and the legislature's priorities. And so same this year, we worked closely with the governor's office, and I think managed to come to a budget that honors and reflects both the governor's priorities and the legislature's priorities.
Right. Now, as you mentioned when you were describing the process, that we do have a unique process in Colorado where the budget is devised by your committee as opposed to each individual chamber. However, of course, it does have to go to each chamber, and that bill that goes to each chamber is called the long bill. First of all, how long is the long bill this year?
The long bill this year is about 630 pages.
Okay, that's long enough. Now, is there how much difference do you generally see between the Senate and the House? So it goes to the Senate first. I know you and the Senate worked pretty hard last week on getting the budget through. How often do you see differences? And of course, this year is going to be a little bit different dynamic in that your party, the Democratic Party, does control both chambers. But how often do you see a lot of variation between the Senate's version that ultimately passes and the House's version?
Yeah, I would say you don't see huge disparities in how the budget ultimately passes. Now, what's interesting is that, the budget does make its way over to the Senate and to the House, and our colleagues, the other 94 legislators, have the opportunity to run amendments to the long bill to either change certain appropriations, increase them, reduce them, move money from one place to another. I mean, everything under the sun basically are the amendments that they work on. And so, and some of those amendments, at the end of the day do get adopted. And then when the budget makes its way over from one chamber to the other, all those amendments are stripped, and the other chamber gets the opportunity to start with a clean budget as it was proposed by the Joint Budget Committee. Right. At the end of the day, the Joint Budget Committee has to reconcile those differences. We are the conference committee on the budget, and so our colleagues add all these amendments. They increase spending on certain areas, they decrease spending on others, and obviously the budget is then by nature out of balance. And so we obviously then come back, and the Joint Budget Committee starts to work through all the different changes that were made in the Senate and the House, and then we figure out, what can we afford, and what will ultimately stick in the final product, and then we deliver again a balanced budget to our colleagues so that they can have an up or down vote. But I would say that generally the core pieces of the budget, the big ticket items, don't really change all that much. Right. It is an opportunity for our colleagues to run amendments, to increase funding in certain areas, as a signal to the Joint Budget Committee that, hey, maybe you missed something here. Maybe we need to place increased focus on a certain area. And so that's obviously something the Joint Budget Committee takes very seriously, and that we'll be working through in conference committee to figure out how can we get back to a balanced budget.
All right. So the state budget, of course, is especially going through the legislature, is a political issue. So I'll ask a little bit of a political question.
In the next couple minutes, yeah. We only, just as objectively as possible, what are some of the main contentions you see? Are there ideological considerations? For instance, what in your opinion are where are the Republicans callously parsimonious, and where would the Republicans say that the Democrats are reckless with taxpayers' money?
Yeah, so I think there's a couple of contentious issues in this budget, and understandably, one is that we are starting to see signs of a recession, and in those times, it would be wise to start building up your reserve, to start figuring out ways to save, so that maybe if cuts are necessary down the road, maybe they're not as painful. And that's a very legitimate issue, and it's something that we had really hoped to address. Unfortunately, with all the increased asks and demands on the budget, we weren't able to increase our statutory reserve, which still sits today at 7.25% of all expenditures. And so we weren't able necessarily to increase that reserve, as I think a lot of folks had hoped. The main objection, I would say, and I totally understand where they're coming from my Republican colleagues, is it wise to start committing ourselves to new resources, to ongoing demands on the budget, like free full-day kindergarten, if we are starting to see signs that the revenue projections are not going to be as optimistic in the future as we had hoped. And so, the question is, are we utilizing a one-time surplus from this next budget year to then fund ongoing programs? And if so, that's really a concern. So that's one big issue that's come up in the budget deliberations. The other is, are we placing enough of a priority on transportation funding? Right. We were able to include in this next year's budget $230 million for transportation, but by all accounts, by the deficit that we have in transportation funding and the needs across our state, that is nowhere near enough to get us going on these on accommodating the growth that we're experiencing and reducing traffic. And so that's been another contentious point.
Okay. Senator Moreno, thank you very much for your objectivity. Thank you very much for your work on the JBC. And, of course, thank you for joining us today. We appreciate it.
Yes, thank you.
Of course. Thank you for having me.
Yes, absolutely. Thank you both very much, Kelly Sloan, and again, Senator Dominick Moreno. Be sure to like and subscribe our YouTube page while you're here. You can find more information in the description below. Find this podcast and more at cobrt.com/radio-podcast. Thank you both very much. Have a lovely day.